So what is going on with Facebook? Why did we see such a massive drop? And is it a buy opportunity at this current price point at 222? What's going on, team? My name is Xander with Facer Trading Academy. If you guys are new to this channel, we do these videos every single Monday. And if you guys aren't subscribed, consider subscribing. If you find value, consider subscribing, smash a like button, and share this with your friend. One of the first things that we do is we talk about the NASDAQ, and then we also talk about the S&P 500. So before we jump into the 5 opportunities and jump into Facebook and what's going on with that and what our thoughts are from a technical standpoint and a fundamental standpoint, as well as 4 other stocks, we're going to want to take a look at the broader picture, the overall market, and what's going on with that. And then base our analysis that we do on our stocks, even if they're great opportunities, off of the overall market. So that's why we always look at /NQ for the NASDAQ. So taking a look at /NQ, the NASDAQ and the S&P 500 are going to look very similar from a price action standpoint and a technical standpoint. So those are going to be fairly quick, but it is important to understand what's going on with those. So we recently saw a massive sell-off. The team, if you guys are on the team, you guys remember when we talked about that bottom and that consolidation that took a little bit, but we did talk about the fact that this was going to begin to recover. We did end up seeing that recovery. We didn't quite see it pan out all the way, and it didn't recover all the way to previous highs. However, we did approach that 180-day moving average. And that's where we ended up finding resistance. That also lined up with the -1 standard deviation, which tends to act as levels of resistance and support. So we ended up seeing that recovery, and then we ended up finding that resistance, and we ended up pulling back. Now, currently, what we're seeing, let's go ahead and zoom in for a closer look. What we're seeing right now is we actually came back down. We ended up seeing that pullback happening. A lot has to do with, the economic activities and the events that are taking place that are influencing the overall market. And then we also are, we are starting to jump into earnings season. And so a lot of companies are coming out with earnings, and that in essence does tend to pull the market down or push it up depending on how those go. And we haven't seen very great earnings in some of the companies, for instance, Facebook, which is what we're going to talk about today. So we did end up seeing some pullback happening over the last week, basically. The good news is we are fairly, I wouldn't say oversold. However, we are starting to curve back up to the upside on the MACD. As far as the RSI goes, we're not super oversold like we were back here when we began to consolidate, but we are starting to curve to the upside. We're at 45, which isn't too overbought, so we do have plenty of room to push to the upside. Critical volume profile level on the NASDAQ, we're sitting at 150.70. So that's probably going to align fairly well with the 180-day moving average on the way up, probably over the next week or so. So you'll see these two kind of converge together. So those are some technical aspects. Another thing is we are down here at the support level, down here at 14,401. And that is basically where we're attempting to consolidate. And we're also holding this 50-day moving average. We haven't yet broken down below it. So from a technical standpoint, I would say the market isn't very clear at this particular moment. A week ago, when we had this massive pullback, it was fairly clear. Not 100%, obviously, but from a technical standpoint, it was fairly fair to assume that we would begin to see that recovery just because we were so oversold. We're not very oversold. We're kind of in the middle right now. So it really just depends on this week's economic events that take place, as well as how earnings go for some of the bigger companies, right? Top 20 companies that are publicly traded are usually the ones that have quite a bit of an impact on the overall market, just because they take up such a big portion of that. And, once we start to look into the S&P 500, you're going to see a lot more of that, because the S&P 500 does consist of those companies. So that's why they have a big impact on the overall market. So basically that is what's going on with NASDAQ. Taking a look at the SPY, like I said, from a technical standpoint, it's going to look very similar. MACD looking very similar. RSI, we're at 47, not 45, but basically in the same range. holding above that 50-day moving average. We're also holding above the 100-day moving average. And so we are basically in this zone right here, which is a support, well, technically a resistance at this point because we're below it, right? So the one thing I do want to note is our critical volume profile on this one is at 434, and we're currently sitting at 447. So that being said, I'm not saying that we are going to start heading to the downside, because I believe, in my opinion, from what I see and from the patterns I've seen historically, we do tend to consolidate, might have a little bit of a pullback correction here, nothing significant, and then we'll continue higher. The market doesn't ever just push to the upside continuously, right? We need those pullbacks, we need those corrections to just sustain that flow that, you know, it consistently has. If we look back at any pullback, usually we end up seeing a bit of a pull to the upside or a push to the upside, and then we end up seeing a little bit of consolidation and then a continuation, or a consolidation, a little bit of correction, and then a continuation. It's never just straight up, especially with the pullback that we've seen just in that week or two ago, right? So this is a pretty significant pullback that we saw. Nothing crazy, but fairly significant. So we need to give it some time before it continues to push up. On this recovery, if you guys remember from the team, we did trade UPRO. And so that correlates very well with the S&P 500. So we were able to capitalize on this move. And so now we ended up seeing and catching this Facebook pullback, which we do like. We're also paying attention to UPRO. If the market does continue to push to the upside, we're also obviously going to take advantage of that. Same setup here with the RSI. We are starting to curve to the upside. MACD is also starting to curve to the upside. So it does look positive. However, we might have a little bit of resistance like we saw up here at this 454 level. We're currently at 447. So a break to the upside, we just need to find support and hold above this 50-day moving average. The downside, let's talk about that, because we don't want to just talk about the upside. We also want to talk about the downside to know what our risk is, right? So the downside is that lower level at 437 is going to be our next support if we do end up breaking lower. And so that's probably going to align fairly well with the one or with the volume profile level, as well as this previous support zone. I don't want to say level because we basically traded in this zone when we consolidated. So I would say 437, between 437 and 425 if we do end up breaking lower. Personally, I don't see that happening. However, it's very possible, right? Because nobody really knows which way it's going to go. That's why we trade technically, because whatever the technicals are telling us and however the market reacts to certain levels, we are able to either take a long position or a short position. So that's basically what's going on with the S&P 500 and the NASDAQ. To conclude the thought, in essence, what I'm saying is I'm assuming, and from my experience, I do believe that we're just going to consolidate for some time and we might continue to see a continuation, right? But that's just my opinion. And that's what I've experienced over the past years. So that's why I'm concluding that. Obviously, you know, take that with a grain of salt. I'm not a financial advisor. And so make your own conclusions, but that's just my opinion, right? So taking a look at the stocks that we are looking at this week, obviously we do, you know, if the market continues to push higher, it's definitely going to benefit these stocks. However, in the grand scheme of things, we are looking at this as great pullback opportunities. So the first one is obviously Facebook, which is, I'm assuming for many of you, is why you even clicked on this video. And for everyone on the team, we've talked about Facebook for the last day and a half, ever since we ended up seeing the fact that we hit that -4 standard deviation. So looking at it from a technical standpoint, two things I do want to talk about fundamentally before we jump into the technicals is obviously earnings had a massive impact on the stock price here. As soon as earnings happened, we ended up seeing a massive drop, and then we could just continue to see a little bit of bleeding continue. And, you know, obviously that could be, you know, after effects of earnings and people just trying to digest it. And as well as there's an issue going on between the US and the EU between data transfer. And so they haven't really found an agreement out per se, as far as how they're going to be doing that or moving forward. It is fairly clear that, you know, Facebook isn't going to leave Europe. And I really don't think that they're going to pull out. And they even said that when their report, when they were talking about it, they said that they're not planning on it, but they do want to emphasize the fact that there needs to be found, or mutual ground needs to be found. So, I don't think that that's going to last too long. And I think that the fact that, earnings weren't as great as people expected, I do believe that that's going to pass. And the opportunity that we have right now is going to be great for not only people who want to invest long term in Facebook, but also day traders or swing traders, right? So we haven't seen these levels. If we zoom out on the big picture, we haven't seen these levels since basically May of last year. Let's go ahead and on the daily chart. I think you'd be able to see a lot more where the last time we had these levels. Not even May, March. We haven't seen these levels in a very, very, very long time. So if you have been waiting to jump in on Facebook, this is definitely an amazing, amazing opportunity to take advantage of this stock and take advantage of this opportunity. Let's go ahead and jump back into the 4-hour chart. That way we can digest this a little bit more on a technical standpoint. So all-time highs were at 384. And we're currently sitting at 220, 265. We saw a little bit more pullback happen in after hours today. However, if you're worried about this dropping even more, and if you don't see the value of Facebook at 220, 265, then maybe you should sit this one out or just not invest in Facebook. However, when something was $380 just a few months ago, and it's now sitting at 222, we're looking at not even measuring it to those all-time highs, but looking at, those previous levels pre-earnings. We're looking at about 44.76% profit potential. And that's huge, considering that this isn't a penny stock and this isn't some hype stock. This is a blue chip stock that's one of the top 20 stocks that are publicly traded. One of the biggest companies, right? So you do want to be, aware of that, right? This isn't just some quick buck. This is a very stable and strong company that's not going to go anywhere, right? They're definitely going to figure out whatever turmoil they're going through, and they're going to recover. And I'm assuming that I'm pretty sure that they're going to come back greater than before. So that's just looking at some things from a fundamental standpoint. From a technical standpoint, looking at the MACD, super, super oversold. Not that the MACD can be oversold, but looking at the RSI, we can conclude that. And we are starting to curve to the upside. We've changed color from red to orange, and then changed back to red for a little bit just today, this morning, and then we're back at orange, right? So I do anticipate that we are nearing the bottom, right? And so we're curving into it. So today, I talked to the team in the morning, and I did let them know that I am opening a starter position at those 225 levels, 225 between 225, 222. And so I did start an opening position, which is a starter position. And the way we trade starter positions, or we trade opportunities like this, is we don't go in 100% with everything, every dollar that we have. We invest with, if you have 10 grand or 20 grand to put into this, let's do 10. That way it's simple. If you have 10 grand, let's say you want to put in a fourth of that right now as a starter position, just to get your feet wet and get you into the game, right? So that would be approximately, $2,500 that you're investing into this particular stock. And then, if you do like it and it begins to reverse and you start getting a little bit more confident, then you can add another fourth size into it, which is another 2,500, and so on and so forth. So our target here is not all the all-time highs, but we are looking at, pre-earning levels. So that's going to be about 325, 330-ish area. That's when we're going to begin to size out and exit the position. If it's going to be strong and just pushing and pushing, obviously we're going to take advantage of that. But if we do begin to see some resistance up here, that is going to be a good time for us to consider taking profit, right? In my opinion, this isn't going to resolve anytime soon. It's not going to be like, oh, boom, tomorrow this thing spikes, which it very well can, but I don't think it will. I think it's going to take some time for this to move. But this is definitely an amazing opportunity where that if you invest into it, you can sleep soundly without worrying if this is going to drop, to $1. It's not going to happen. So in essence what we're looking at with Facebook. Super oversold, or curving MACD, super oversold RSI. We are, like I said earlier in this video, I said we are at -4 standard deviation. And from a statistical standpoint, stocks or anything that drops that much, unless it's like a hype stock or a penny stock, then those don't really, this rule doesn't really apply to them, just because they trade in a very weird way. But stocks like this, you know, from a statistical standpoint, stocks like this do not stay at -4 for too long, right? Only 99.9% of the time, the stock will remain between -3 and +3 standard deviation. It'll trade in that zone. So almost, it's not going to last too long at -4, and it's definitely going to begin to bounce back. So it is a very important thing to understand, and definitely something to consider if you are attempting to take advantage of this opportunity. Like I said, 40%. So make sure to, position size, which we talked about just earlier, and obviously manage your risk, right? You will always want to manage your risk, even if it's an amazing opportunity. Like I said, this is more so a swing trade, but definitely an opportunity for long-term investors as well as day traders to take advantage of this play. In my opinion, I really like this stock, and I like this opportunity, and I like where this price point is at. And like I said, personally, full disclosure, I did open a starter position on this particular stock for the reasons that we talked about. And I will begin to size in once we begin to see confirmation and a reversal happening, which I think will happen very, very soon. So that's what's going on with Facebook. The next stock that we are looking at with the team is Irdm. So Irdm, big picture, let's go ahead and zoom out that way you guys can kind of see what's going on here. For the most part, this has been trading fairly horizontally, and we had support constantly here at 36.30, and then a resistance back here at 43.57. Just recently, we ended up pulling back to 31.73. I do want to say we do have earnings coming up on the 17th, so beware of that. However, similarly to Facebook, we did look at standard deviation levels here. And so with this one, we're currently sitting at almost -3 standard deviation, which is a very oversold area. And then taking a look at the RSI, we're fairly oversold on the RSI. The MACD is starting to curve to the upside as well. And so this is why this one caught my eye. I would start looking into this once we do break 33.23, which is going to be above this blue line, which is your EMA. And so that's going to give us a little more confirmation that we are breaking up to the upside. Add more size once we break the 50, and so on and so forth. Resistance, the first level, obviously here at 36.37, because previous supports become new resistances. But I do anticipate that we will return back into the zone, if not higher, but definitely in this zone, in my opinion. We also have the critical volume profile here at that level, and so that's why this one caught our eye, and that's why we're paying attention to this one this week. We do believe that this is a great opportunity as well. The next one that we're going to be looking at is Shop. So many of you probably know this stock, Shopify. We had highs of 1762 here on this one, and then we ended up coming down to 780. We're currently sitting at 866. So again, this one's sitting basically at -2 standard deviation. Again, fairly oversold level. And so this is why, one of the reasons that this one caught our eye. We are attempting to break, let's go ahead and zoom in. We are attempting to break this 50-day moving average. For one thing, RSI, we're not super overbought, so this is that's a good sign. And we are super close to previous support level, which is 780. So your downside here is approximately 7.5, maybe 8%. And your upside, if we do recover to all-time highs, we're looking at about almost 93, 92%, which is amazing. So not saying that we're going to recover to those levels, but I would probably be realistically looking at probably, about 1287. Realistically, that's when I'd be attempting to size out after we hit that level. So that's about 32%, which is still an amazing opportunity if you're only putting up about 5% of risk. So which would be just below the support level. So that is why that one caught our eye, and that's why we're paying attention to Shop. Again, we haven't seen this level for a very, very long time, since basically May of last year, and probably before that. So definitely a great dip buy opportunity. Critical volume profile level here at 1479. That's important to notice and consider. And one last thing is we do have earnings here on the 16th. So be aware of that. That could send this lower, but that can also send this higher very quickly. So if you're managing your risk, you wouldn't have anything to worry about other than benefiting from the upside. But that is something to consider, that trading before earnings is a little bit more complicated. We've talked about this. If you've been following along with this channel, we've talked about this in some of the videos. Try to touch on this every time there's earnings coming up for a certain company that we're looking at. So do consider that, trading pre-earnings and trying to predict where it goes, it's not as easy as you think. And if you're not managing your risk, you can lose a lot of money. So make sure that you're managing your risk. If you do jump into this before earnings, make sure you're sizing in, and make sure that you are locking in profits when we do hit overbought levels. We're not super overbought, and it looks like we're doing fairly good with the MACD. We are in the green, and we are pretty much at 46, which is almost on the bullish side of the trend. So that's what we're looking at with SHOP. And the last two that we're looking at is going to be JBL. Let's go ahead and zoom out for this one. JBL, we really like this one. We've traded this one a lot on this channel. So if you guys have been following along, again, you'd probably remember this stock. The reason we like it is it's very consistent. It's pretty much always holding above the 180-day moving average. And every time it does dip, it becomes a oversold opportunity, and it always ends up recovering and continues higher. Dips, which we saw right here, boom, took off, posted new all-time highs. Boom, we took a dip, became oversold, ended up recovering. This was with the overall market, and now we're seeing a little bit of a pullback here because the overall market is pulling back as well. So I'm not saying that at this level, this is probably the most perfect trade opportunity. So because we're looking at about 6%, 6.5% risk. However, the upside here is about 18. So it's about I would say a little better than 1 to 2, which is a good start. But ideally, you want to pump that risk to reward. You want to make sure your risk is as low as possible. So ideally, we are looking at a little bit of a pullback still to this at this point. This one's definitely on our radar for this week, because if the overall market continues to push higher, this one, I believe, will continue to push higher as well. Like I said, very consistent uptrend above the 180-day moving average. So the opportunity, even at this point, is still a great opportunity, in my opinion. We are seeing the RSI pointing to the downside here. If we take a look at that, we do see it pointing to the downside. So I wouldn't be surprised to see it pull back a little bit more. So ideally, I would probably say look to jump in around 50, ideally probably around 56.99, because that has been a support here in the last few weeks. So if we do end up pulling back to this level, this would be a great support level, a great entry. But even at this point, definitely something to set your alerts on and keep an eye on for this dip buy opportunity, because even from this point on up, we do have a great profit potential. MACD, again, is also pulling back a little bit. So like I said, I would anticipate this pulling back a little bit more. So I'd stay a little bit patient with this, but I did want to announce this or discuss this in this week's Stock Talk video. That way it's on your radar. That way you guys don't miss it in the next few days or potentially next few weeks. So that's what's going on with JBL. And the last one is going to be RRR. And this one has a very similar setup to JBL, or a very similar trend, right? It's been holding above the 180-day moving average. Every time it dips, we end up pulling higher, dips, pulls higher, dips, pulls higher, comes down to the 180-day moving average, finds support, consolidates, pushes higher, comes down, consolidates, pushes higher. And now we saw that massive pullback happen that we not only saw with the overall market, but we also saw with earnings as well. Earnings in this case ended up helping this particular stock. And so this is why we do like this one. So I do anticipate that we will at least push up to this 55.38 level, which is about 13.79%. Obviously, the risk is, this is more of a riskier play here. It's a 50-50. I wouldn't say it's a 50-50, but your risk is about 1-to-1 at this point. Obviously, you don't have to have it 1-to-1, so you can manage your risk just underneath this one, or the EMA, which is going to be about I would say 4% for a potential 16. So if you manage your risk just under the EMA, that would be a great opportunity for you and a great risk management strategy for you. Definitely do anticipate this to push to those previous resistance levels at 55.63. We're not super overbought yet on this particular stock. However, we are heading to that point. So I would anticipate potentially beginning to see some resistance and consolidation around the $50 level. So we are at about 48. MACD is looking great. And so that is basically what the stocks are for this week. So if you guys found any value, if you guys have stuck around to this point, make sure to subscribe, smash the like button, share this with a friend, and I'll see you guys on next week's Stock Talk video.